One of the keys to success in this industry is learning how to scale. You have to learn how to scale. So, can we scale up with a strangle? Or how can we scale up with a strangle? When accounts are ready to size up their trading, we can do it two ways. We can either double the number of contracts or just add contracts. Doesn't have to be double. Or we can get closer to the money with maybe up to double the delta. So like, let's say you're used to selling 16 delta. Maybe you go to 22 or 25.
Sure.
For the purpose of this one today, we just said if you're selling 16, you go to 32. And for the purpose,
double it so they can double the numbers, make
right?
it easy.
And for the purpose today, let's say you usually do 3 contracts. So instead of going to 4 or 5, for the purpose today, we said if you're doing 3, you go to 6. Okay. So which is the better option in terms of risk reward? We decided to take a good hard look at this. So here are the choices to scale up our trading. Both carry the potential for profit, more potential for profit, and both have more risk, but in different ways. So 116 delta versus 116 delta versus 32 delta, or 1 contract versus 2 contracts.
Got it.
Okay, it's kind of like the same. We're just playing games with number of contracts versus deltas. That's all this is. 2005 to present, 45 days managed at 21 days. Compared increasing the size with 216 deltas versus 130 delta. Okay, we filtered the results for IV below and above 30 to see the impact of greater volatility. So when not accounting for implied volatility, increasing the number of contracts at the 16 delta level keeps the success rate and P&L high, but has more volatility than the 30 delta variety, of course, because you're obviously taking more risk with the additional contracts. But as you can see here, if you increase the size of contracts and you don't do anything with volatility, your success rate actually goes up. Your average P&L goes
more
up.
Importantly, or equally as important.
Yeah, because you're staying at 16 delta, so your success rate's gonna be better, and in this case your P&L is better, and the volatility of P&L is obviously a little bit higher because you have more contracts.
All pretty. I like the success rate being pretty close. I'm not as happy with this.
Well, of course you're gonna have a higher success rate when you're selling 16 delta as opposed to 32.
Sure.
However, in low implied volatility, the results seem to be similar to trading in all environments. So if you look here, 70 to 66, 51, 34, again, it looks basically the same when implied volatility is low. So far, like an environment we're in now, and you have low volatility, you can get away with just adding contracts.
Sure.
In low volatility, you can absolutely get away with adding contracts, and we've been there, and it's not going to hurt you.
Yeah, it doesn't even change the standard deviation of risk that much either.
Nope, it doesn't. And the average P&L is higher, the success rate's higher. The argument here is in low volatility, you kind of
encouraged by the number of contracts.
In higher volatility, the P&L increases across the board for both strategies and slightly increases the risk for the higher delta strategy. The success rates remain slightly or basically constant. So here, even with implied volatility over 30, the success rate's higher, the average P&L is higher with increasing the contracts, and the standard deviation, of course, is going to be lower on just with the fewer contracts. But
now it does use more buying power too, is another thing to say. You're doubling your buying power here. If you're going to be doing
yep, you are doing more. You're using more buying power.
2 contracts versus 1. You're not doubling your P&L that like
you are using more buying power, but you have a higher success rate, and your P&L is higher.
Yes.
So it kind of goes a little bit counter to what we were thinking.
That's true. That's true.
Because showing that the 16 delta is just a very good delta. Notice that the risk reward are proportional for both strategies. In other words, higher P&L is met with higher risk, and the success rates vary solely based on the delta of the strategy. However, there's one more key difference, and we're looking at tail risk. Obviously, when you have more contracts, you are going to have more tail risk.
Sure.
Now, Tony pointed out another interesting thing here, which is the amount of capital. When you have more contracts, you're going to use more capital. It's
significantly more. It doubles. I mean,
yeah.
It's a big number for people.
So you're going to have more tail risk, and you're going to have double the capital usage. So increasing the number of contracts increases your tail risk by 44% compared to increasing your deltas. So this is the fundamental reason why we would choose to increase our deltas before increasing our contract size. So based on our research, when we looked at the largest loss based on contracts versus deltas, And based on the fact that we had to put up some additional money to make the trade with contracts, more contracts, we came to the conclusion that even though the results were very similar, and even though you can get away with it, okay, in the end, what's our real objective is to keep that kind of that outlier risk, over to a minimum or to the smallest number possible, and also to be the most capital efficient that we can be. But I think we wanted to show that it's not as bad as we thought.
It's not as bad as you thought, throwing out that big outlier move. And again, this is no adjustment or anything else like that, too, which is
No.
really just straight lining it.
Some of the takeaways: when we are ready to take on more risk and increase size, in a perfect world, we prefer to increase deltas as opposed to the number of contracts. Now, I think there's another world. I think if you're used to doing 3 lots, you go to 4 lots and you increase deltas tiny. Like there's a middle ground.
When you go from 1 to 2, there's no other.
There's 1 to 2. There's nothing else.
Right.
But instead of 5 to 10, you go 5 to 7. Maybe increase the deltas from 16 to 18 or 16 to 20.
Sure.
You do it slowly. P&L and the volatility P&L increase proportionally, regardless of the strategy, but tail risk is significantly more prevalent when increasing contracts.